Hello, everyone, and welcome. My name is Beth Strausser, and I work in the policy office in the Division of Institution and Award Support at the National Science Foundation. It is my pleasure to welcome you today to the Spring 2022 NSF Virtual Grants Conference. So I am now pleased to present this financial management update session, which will provide an overview of financial management practices and operations, as well as new initiatives within the Division of Financial Management. Our distinguished speakers today are Justin Pohl and Jesse Simons.
Good afternoon, everyone, and welcome to our session on NSF post-award financial processes. My name is Jesse Simons. I'm the branch chief of our Payments and Analytics branch within the Division of Financial Management. Joining me for today's presentation is Justin Pohl, who's a senior accountant within the monitoring and analytics section within our branch. So we have a fairly diverse agenda today that hopefully will be engaging to both new and veteran NSF grantees. So today we'll highlight some key areas across both the operations and monitoring section of our team. We'll update our research community on some recent internal agency process and system improvements. And finally, spotlight some recent innovations and opportunities for future engagement. So first, I'd like to share a little bit about our organization and mission. So we are the Payments and Analytics branch. Some of our longer standing grantees might have previously known us as the Cash Management branch. And our branch sits within the Division of Financial Management, which is under the Office of Budget, Finance, and Award Management, which is led by NSF's Chief Financial Officer. So our organization is responsible for overseeing the entirety of NSF's payment operations. So this includes not only grants, but contracts, travel, and other administrative payments across NSF. We also have a responsibility for financial outreach and engagement with our grantee community, and post-award financial monitoring activities for which we work closely with our other colleagues and divisions under the BFA organization. Many of our grantees use ACMS, which is the Awardee Cash Management Service. Some of you may use ACMS in conjunction to other government-wide grant payment systems such as HHS PMS or Treasury ASAP. So ACMS is NSF's custom grants payment system. It's nearing its 10th birthday next year. And one of the advantages of ACMS that hopefully you as our grantees enjoy is that we require disbursement requests at the individual award level rather than drawing down, for example, a summary advance payment and reporting award level expenditures later, which is how NSF's previous grant payment process worked. So as a result, we have eliminated the collection of the SF 425 Federal Financial Report at NSF. But to supplement some of the data that previously we received under that report, there are a few very important annual financial reporting initiatives that our branch runs and we require from our community to help fill in those gaps. So specifically, we have our annual grant accrual validation, which typically kicks off in Q1 of the next fiscal year following our year-end close and publication of our federal financial statements. And we also have our annual program income reporting, which Justin will touch on a little bit later in the presentation. So next, I wanted to draw your attention to a very comprehensive artifact that our team publishes on our external website, the link of which you can see on this slide. So this is our grants frequently asked questions, which covers an overview of key topics related to our grant payment operations and monitoring. So I encourage you all to check out this document on our website. We cover topics such as ACMS and general payment management, some of our critical dates and canceling appropriations, which we'll touch on a little bit later today, program income reporting, baseline monitoring activities, and some specific topics around SBIR, STTR, and fellowship grant awards. So my team puts a lot of work into grooming this FAQ annually as our business continues to evolve, and we really use it frequently internally as a one-stop shop for common inquiries that we receive from our grantees. So we just published our FY22 updates of the FAQ, which are available on our website. So I encourage you all to download this and then bookmark the link, which doesn't change with these annual updates. Next, I'd like to take a deeper dive into the payment operations side of our branch's portfolio. So we have a team of 5 dedicated specialists that are focus on business support and payment processing. And they're assigned a sub-portfolio of NSF grantees based on states. So you can find your dedicated points of contact if you haven't worked with them previously on our external NSF PAB website, linked in the previous slide. And I strongly encourage you to reach out to them for any questions that you might have about payments, refunding money to NSF, or any other post-award financial processes that may or may not be covered in the course of this presentation. So this process flow shows our grants payment process at a high level and how we process your ACMS drawdowns daily. Now, something to be mindful of in this first box is our cutoff for our daily payment schedule process is 8 o'clock p.m. Eastern Standard Time. So please be mindful of this cutoff when preparing and certifying your request. So if you meet this cutoff, then it will be scheduled for next day processing. So on the following business day, our payment specialists review the ACMS drawdowns from the previous night's process, and we prepare a payment schedule to transmit to the Department of Treasury. Disbursements are typically scheduled for the next business day, at which time Treasury will process the requested disbursements to our grantees using the bank account in our system records. So one important exception to this 2 business day end-to-end cycle is occasionally we have what's referred to by Treasury as large dollar payment schedules. That is when we exceed $50 million in grant payments for a given day. So in order for us to meet Treasury cash forecasting requirements, when we have schedules that exceed this threshold, we're required to give 2 business days notice for disbursement rather than 1. So this is a fairly infrequent scenario, but it is a little bit more common during some peak periods, such as our fiscal year end, which is September annually, and many of our grantees' fiscal year ends, which is around June 30. So please be mindful of those specific periods and build that expectation into your timeline when requesting cash during these times. So you might be asking, and here's some questions that we commonly receive within our team. And why is my payment delayed? Or why did I receive less money than requested? So there's a few common root causes I'd like to cover today, which I'll delve into deeper in the subsequent slides. So in terms of delayed payments, one of the common misinterpretations in our community is the use of the NSF remarks field. So this field is intended to be used only for items that require specific attention that need to be communicated to our payment specialists. If you have any notes for your own internal records that should be associated with that payment request, we recommend that you use the internal comments field to capture these notes for this organization. The reason being that if you populate anything in this remarks field, it would go through an additional NSF review, which may or may not have been intended depending on the nature of those specific comments. Another common reason is delays or allowing your SAM registration to lapse, your system for award management. So please be sure to maintain an active and up-to-date SAM registration to avoid any of these delays. It's very important for our system synchronization process to make sure our bank account for your organization is current, address information, and so on. Recently, with the implementation of the Unique Entity Identifier, or UEI, GSA, the General Services Administration has been experiencing some backlog in processing these registrations. So strongly encourage you to be mindful of those expiration dates and be sure to get those recertifications in early to avoid any delays in receiving payment. So another common issue is when there's a reduction in payments received, which could be one of 2 common root causes. So in some instances, your payment request could be what's called partially accepted. So this is specific status in ACMS, which means that one or more awards within your payment request failed to post to our financial system due to a technical issue. So if you look at your ACMS payment requests in the system, you can find more information about those awards that failed validation, and then contact your assigned payment specialist on our website to help you resolve those specific award or set of awards. Another common reason for a reduced payment is something called reduction through Treasury offset, or the Treasury offset program, are referred to as TOPS. So unfortunately, our team has very little visibility in our specific NSF systems into the nature of these offsets, but they're typically due to other federal debts owed. So there's a toll-free number that you can contact here, and a specialist at Treasury can help you through identifying what that particular offset was for. But I do have some very exciting news that will be encouraging to any of our grantees that may have experienced TOPS in the past. So we recently received a waiver for our NSF Grants and Cooperative Agreement Program from the Department of Treasury that exempts them from future TOPS offsets. So although we received that waiver, it will take some time for us to implement that within our NSF systems and coordinate some testing for implementation with the Department of Treasury. But I wanted to share that as a sneak preview of what should be hopefully a very exciting enhancement for our community, and more information to come, which we'll distribute via our ACMS listserv when that implementation has been entered into our production systems. Next, I'm going to talk a little bit about what's called our post-award adjustment process. So every NSF grant has a period of performance, and 120 days after the end of that period of performance, we execute what's called a financial closeout. So this is a fully automated process that looks at any awards that are past 120 days expiration, and the remaining funds are deobligated from the award, meaning that those remaining balances are essentially swept, and the overall award amount is also reduced by that remaining balance, such that the award amount equals what was expended at the time of closeout. So after this 120-day closeout, NSF grantees have an additional 14 months to submit what's called an upward adjustment, which means an additional payment request for any expenses incurred within the period of performance after financial closeout. So the threshold of this upward adjustment is limited to the remaining balance that was swept at the time of close. Now, there's a common misconception, both externally within our community and sometimes even internally within our NSF offices, on whether a financially closed award needs to be reopened to process these additional reimbursements, or whether an adjustment request will suffice. So we've prepared a case study here to benchmark your current knowledge of the scenario. So I'll allow you to read this slide to yourself and just pause for 5 to 10 seconds to review the responses and come up with what you think the best option is for this specific scenario. Okay, so hopefully everyone had a chance to read that. So the correct answer is letter B. In order to receive reimbursement for this request, you must submit an adjustment via ACMS, provide a justification for the adjustment, and maintain appropriate supporting documentation in the event that this expense is audited or selected for additional advanced monitoring. So we should only make adjustments to financially closed awards for reimbursements to expenses incurred during the award project period. So if you have expenses after that period of performance expiration date, this is when an award reopen or a no-cost extension would be appropriate, and please work with your grants officer to initiate that process. So to put a close on this particular topic, I wanted to talk about some limitations to this closed award adjustment process. So first off, the transaction total must be greater than or equal to $0. So your institution, if this is a negative request, you must offset, or refund, I should say, you must offset this return against an available award that you're making a payment against. If such an award is not available, then you must remit those funds to NSF through other means, which I'll talk about in the next section of the presentation. And then there are some additional restrictions within the system that we have a de minimis threshold that an award request must be greater than or equal to plus or minus $1. Upward adjustments, as I mentioned, are available for 14 months after that financial closeout date. Now, downward adjustments, this would mean you're refunding money back to the award, we will accept those refunds until the appropriation associated with the funding line cancels, which is a flag in ACMS that you should see on the available amendments and splits, and your assigned payment specialist can help you with that information as well. And Justin will talk a little bit about canceling appropriations in detail in the second section of our presentation today. So on the topic of refunds, how do I return funds to NSF? So we've talked a lot about money going out of NSF. What about money coming back to us? Now, if your organization needs to remit funds to NSF due to a positive cash on hand balance, there's one of these three ways. So we strongly encourage electronic methods while possible. So within ACMS, as I mentioned on the last slide, as long as your overall payment request is a net positive number, you can submit a credit against the award as an offset to your current payment request. We cannot accept a net negative request through NSF in ACMS. So if ACMS is no longer an option, that say you have only one award or you don't have any other awards you need to request drawdowns for, submitting remittances to NSF online through pay.gov is our preferred method. So this allows remitters to make secure electronic payments and also decreases the processing time necessary for NSF to receive, process a paper check, and then apply that money back to the award if applicable. Now, check is our least preferred method. Now, NSF, as have presumably other agencies and maybe some of our organizations in the audience, have experienced some pretty significant delays in processing manual checks, paper checks during the pandemic, and we still haven't returned to normal timeframes in this specific business process. And I think taking that a step further, there's an NSF and government-wide shift to reduce paper checks, both incoming and outgoing, as much as feasible. Now, in some past outreach and presentations, engagement with our community, we've received a lot of feedback from some grantees that they might have specific constraints that prevent their organization from using pay.gov. For example, maybe your organization is part of a state-managed treasury and the bank account that receives money from NSF does not allow ACH debit into that central bank account. So we've been collaborating with the Department of Treasury on this specific scenario and how we can help accommodate this and other special requirements of our financial research community to help reduce our overall check volume. So there's been some newer platforms that Treasury's been successful in utilizing with their customers that have similar constraints, such as major US financial services institutions. So our team is going to be launching a small pilot this year to test the feasibility of this platform for some of our customers. So our team may be reaching out to you to gauge your interest in participating in this pilot, particularly if you're a frequent remitter by check or have previously indicated to us your inability to use pay.gov as a platform. So if anyone in the audience today is interested in that pilot, please reach out to your assigned payment specialist for more details, and we would be happy to include you in this outreach. So one additional note I'd like to make about pay.gov, if you're using this system for the first time, we recommend that you contact your financial institution to execute what's called a whitelisting of NSF's account to allow debits, which oftentimes need special permissions depending on how that account is configured. So the specific detail on account number that are needed depending on the digit construct that your bank uses are on this slide, and they're also on our grant FAQ. So that covers the payment and remittance operations of our portfolio that we wanted to cover with you today. So next I'm going to pass it over to Justin Pohl, our senior accountant, who's going to talk a little bit about canceling appropriations and some year-end critical dates. So Justin, over to you.
Thank you, Jesse. So some of you might be asking, like, canceling appropriation might be important to your organization. It's important to understand that NSF, the funds that NSF utilizes to process and issue grants are provided by a legal funding appropriation, and NSF is required to comply with the public law that requires all federal agencies to close 6th-year appropriation accounts and cancel any remaining balances by September 30th of the 5th year after the period of availability. For most NSF appropriations that we utilize to fund research grants, the period of availability is a 2-year fiscal period, but not necessarily 24 months. And I want to get into that a little bit further. The key for appropriation is the funds must be used for the right purpose at the right time and for the appropriate amount. We cannot exceed the appropriations given to us. So the reason why we talk about this quite frequently in our outreach sessions is each year, at the end of our fiscal year, we must give back millions of dollars of obligated funds that were unused. And for the fiscal year 2022 fund, or for this current fiscal year, this means that any unspent appropriations from fiscal year 2016 will be canceled by September 30th of this year. You might be wondering how you can identify awards that are impacted by canceling appropriations, and we want to make this as easy as possible for you to see. At the beginning of each fiscal year in October, we're going to add an indicator in ACMS with a red flag placed next to the award number that you'll see in the ACMS payment screen or when you're looking up a particular award to view. Also, your payment specialist will notify all institutions that have awards with funds to be canceled each fiscal year, starting in January, and you'll receive these emails monthly until September or until the award has been closed or fully liquidated. A key date to remember is Friday, September 23rd, 2022 at 2 p.m. Eastern Daylight Time. And the reason why this is an important date to understand is although the funds will be available until the end of the fiscal year, September 30th, our system for paying you will not be available for the final 4 to 5 business days of the year. We are required to shut down our system to allow for NSF to finalize payments and reconcile our own general ledger accounts for our year-end process. And so it's important to understand that your organization will not have access to ACMS for that final week, but we do plan on having ACMS available at the beginning of the next fiscal year on October 1st. So if your award is canceling at the end of this fiscal year, no further adjustments or extensions will be available for that particular award after this the system is shut down on September 23rd. So you'll need to make any final payment request for that award prior to that shutdown. If the entire award is funded by a canceling appropriation, a no-cost extension will not be granted or approved to extend the life of that appropriation. You will also not have the typical 120 days available to report your final expenditures. It is important to know that if a no-cost extension is granted for your individual award that gives you up until that final day of availability to spend your funding, that all final reports and expenditures need to be submitted by that September 23rd date in order to ensure that your institution receives the final award. Just to kind of recap that, usually an institution is allowed 120 days to complete financial activity prior to the award's financial closing, but all payment activity for these awards impacted by canceling appropriations must be completed by the September 23rd deadline. Any remaining funds for the award after that date will be deobligated and returned to the Department of Treasury. Other non-financial reporting deadlines are not impacted by this. Some of your awards are going to have multiple funding appropriations associated with it. And in these instances, only the funding that is impacted by the canceling appropriation will become unavailable. And so we have an example here on screen showing an award that originally received $250,000 with fiscal year 2016 funding. It later received a supplement of $25,000. If your award happened to have $100,000 remaining as of today, you would receive a notice indicating that $75,000 of that unspent balance is at risk of canceling on September 30th, and only the $25,000 from the supplement would remain to be available if the end date had been extended past September 30th. That might be a surprise to some of your faculty members. So they may have asked for a no-cost extension and received it, extending the end date past at September 30th, thinking they have all that time to spend the remaining $100,000 available in this example. It's important to note, though, that come September 30th, the $75,000 remaining from the original balance would become unavailable and would be de-obligated. This is another view of the appropriation lifecycle. As I had mentioned before, the appropriation has an available period typically of 2 years. That is where we are able to make new obligations, and you'll receive a new award. Once that period of availability has ended, the authority will expire and we are permitted to liquidate existing obligations, but we are not able to make any new obligations. This is a good graphic for you to understand how the appropriation works. Most awards are given a 3 to 5 year life cycle and typically will not run up to the period where it is impacted by canceling appropriations. Most awards that run into this issue have experienced some sort of delay through their life cycle, where in a no-cost extension or a multiple no-cost extension has been requested to accommodate that delay. But if your award is impacted by canceling appropriations, it's important to remember that the funding must be spent by the end of September. Organizations are cautioned against advancing remaining funds simply to expend the remaining balance. In some circumstances, it would be appropriate to request an advance payment if there are known expenditures that have been incurred prior to the cancellation date. For example, services that were performed or supplies received prior to the September 30th cutoff of the year in question. However, the invoices that will be received and paid by your organization, they might be received after the cancellation date. It is inappropriate to request an advance payment of canceling funds simply to allow further expenditures to be incurred after the September 30th cancellation date, even if the project has been extended to permit further use of non-canceling funds. The use of canceling funds for expenditures incurred after the cancellation date is not allowed. So in general, advance payments to grantees must be limited to the minimum amount needed. The timing of advance payments must be in accordance with the actual immediate cash requirements of the grantee in carrying out the purpose of the approved program. The timing and amount of advance payments must be as close as administratively practicable to the actual disbursements by the grantee for the program costs and the proportionate share of any allowable indirect F&A. It is important to remember that the process for determining advance timing is the period the advance covers, and the amount requested should be based on a justifiable estimation that could be supported in the event of an audit. And so for this particular use case that I've had on screen here, the correct answer is B. An advance payment should be limited to the expected expenditures for the period in question. Next, I'm going to cover a few reporting updates and system enhancements that we have coming up. As Jesse had mentioned previously, we require an annual submission of program income. We have a program income worksheet that needs to be submitted for any active awards that are active within the federal fiscal year that is being requested. The most recent submission was for federal fiscal year 21. The submission is typically due by November 14th of each year. It will open up after the beginning of the fiscal year, early in October. We want to give you a teaser and tell you to be on the lookout for a program income webinar that we typically do in middle of October, where you can get more information about this process. All institutions that had active awards during the federal fiscal year is required to submit a program income report, whether they had earned and spent program income or not. We have a recording of our last year's webinar available on our website if you're interested in learning more now. Another particular topic we want to focus on is the importance of getting and submitting project reports on a timely fashion. You may have heard that uniform guidance now requires federal awarding agencies to post overdue project reports at the time of award closeout to a public-facing repository of poor performers. This system is known as FAPIS, the Federal Awardee Performance Information Integrity System. The specific requirement is that all required reports must be submitted within 1 year of the period of performance end date. This refers to annual progress reports, final progress reports, and project outcome reports. At that time, the federal agency must close out the award, and any awards that are closed with unsubmitted reports must be reported to FAPIS as a material failure to comply with the terms and conditions of the award. FAPIS records are based on entities, so the award recipients, the colleges and universities, and not the individuals, so not the faculty or principal investigators. Even after a principal investigator has left your institution, it's still the institution's responsibility to ensure that all required reports are submitted in accordance with the award terms and conditions. FAPIS records remain in the system for 5 years and then are archived. All federal awarding entities are required to evaluate an entity's record in FAPIS prior to issuing a federal award. So you really don't want to be added into FAPIS, so don't wait until it's too late. The specific citation to the uniform guidance, if you're interested, is 2 CFR 200.344. And I provided a link here on this slide as well as a quotation of the requirement. Another system enhancement that we want you to be aware of is we are modernizing the collection of banking information for external individual recipients, such as postdoctoral fellowship recipients and honorary award recipients. This will also include invitational travelers and other miscellaneous payees for which NSF is paying for some item directly. This does not change the process for organizations registered via SAM.gov. Organizations that are SAM organizations will continue to update their SAM profile in order to update their banking data. However, we wanted to make you aware that this link will start appearing under the Managed Financials. You'll see a link here that's highlighted in yellow that will be called Individual Banking. If you happen to click on this link and you are not supposed to be a user of it, you will be presented with an error message indicating that the individual banking link is only for those users who have received notice from NSF through an email to update their banking information on research.gov. If you have not received such a notice, NSF does not need your individual banking information at this time, and we provide a reminder here that organizations registered in SAM must continue to update their banking data via their SAM profile in order for NSF to receive that update. Next, I want to focus on some of the innovations that we've been working on and how we have found the process of innovating in a government environment to be enriching. In our branch, we've been using technology as an accelerator for our grants monitoring and oversight processes. Our primary responsibilities are to manage and process all grant, commercial, and travel payments for the entirety of the agency, as Jesse had described previously. But we also have a responsibility for post-award grant financial monitoring. NSF issues about 11,000 new grant awards per year and have an active portfolio ranging between 45 and 50,000 grants per year. We have a wealth of operational data, and over the past 2 years, we've been looking at ways to optimize our resource allocation across this broad portfolio. In doing so, we have been shifting away from the use of Excel, Access databases, and CAN system reports to RPA, which is robotic process automation, custom dashboards in Tableau, and most recently, the use of AI and machine learning. In a few slides, Jesse will take a deeper dive into a specific use case around monitoring spending against a grant and show the evolution of how we apply technology to move from spreadsheets to self-service analytics, and most recently to artificial intelligence. However, I want to first update you on some of our efforts in exploring blockchain technology. Blockchain is a type of distributed ledger technology. Like the name indicates, a blockchain is a chain of blocks that contains information. Each block contains some data, the hash of the block and the hash of the previous block. A hash identifies a block and all of its contents and is always unique, similar to a person's fingerprint. And once data has been recorded inside a blockchain, it becomes very difficult to change it. The distributed ledger is not hosted by any single entity. Rather, it is hosted by a network of computers called nodes and involves a consensus mechanism to validate transactions without relying on a third party. This network allows the passing of digital assets or items of real value in a secure and transparent manner. And the network is kept secure with an ingenious combination of public-private key cryptography. And the result is an immutable, decentralized ledger that offers a single version of the truth and retains information on the entire history of transactions. For nearly 3 years now, we've been engaged in a collaboration with the Bureau of Fiscal Service within the Department of Treasury to explore a blockchain use case of making grant payments. And through the years, we have heard our grantee community describe the challenges they face administering federal grants while using multiple federal payment systems, and the lack of system transparency these systems provide, and the reporting burden they face. One grant recipient summed it up when she said, "Getting paid shouldn't be so hard." So from the beginning, we've been working on this hypothesis that this technology, the distributed ledger technology, has the potential to increase transparency of the grant payment lifecycle while also enabling efficiencies and reducing burden through reduced reporting. We began by building a small scope minimum viable product proof of concept and worked to validate that concept with our grants community. In the second phase, we expanded that proof of concept MVP, and we started building out an ecosystem and identifying regulatory hurdles. We're wrapping up currently phase 3, and we've been digging further into the details and laying the groundwork for taking this project to a pilot, where we hope to process a real grant payment with connectivity to live systems. I like to think of this project as exploring the question of what does the future of making payments look like? And how does emerging technologies impact the future of the making payment ecosystem? The way we make payments today does not look the same way it did in the 1970s or 80s. We are, in a way, on the cusp of another reinvention of this process. Would describe the old process as an analog one. Currently, today, we are in what I would call a hybrid model, where we are partially digital, but we still partially support several analog features. And the question is, how do we fully embrace a digital future of making payments? A critical part of preparing for a pilot for the distributed ledger technology is we've identified and engaged with key stakeholders who include the grant-making agencies, grantees such as yourself, oversight bodies, and conveners of the ecosystem. And throughout this project, we have focused heavily on engaging our stakeholder ecosystem early, assessing the pain points of the current processes, identifying key benefits as well as risks and concerns associated with this technology, and evaluating the level of appetite and buy-in for each level of the stakeholders. The process to date has identified significant opportunities for automation, the potential for reducing burden, and increasing transparency, especially with regards to multi-tier grant payments. These goals and ideas are drawn from our collaboration with key members of the grant ecosystem, and some of these points are represented here on this slide. At this stage, the pilot date is still to be determined. It is contingent on the outcome of these plans and the availability of financial resources at the agencies to move forward. However, the pilot plan has been designed to assess these areas. improving customer service, increasing efficiency by reducing burden, improving transparency into the grant process, increase the data available for insights and innovation, encourage community adoption of the system, and exploring a new age technology. The pilot would be conducted using key functions from our use cases, covering the areas of the award tokenization and management, payment execution, and award monitoring and closeout. So that's just kind of a brief description of the efforts we've been doing to explore blockchain and distributed ledger technology. I'm now going to pass it on to Jesse to talk about our other efforts.
Thanks so much, Justin. So I'm going to talk about a specific use case within the financial monitoring side of the house of our branch around final unliquidated balances. So final unliquidated balances of concern, or FUBs for short, is a specific scenario where we have awards with in the last 3 months of their period of performance, and they have 75% or more of their available balance remaining. So each month we review this population of awards and we send out notifications to our ACMS certifiers and preparers to advise them of these awards. These large unliquidated balances could indicate that the institution may be encountering problems with completing the award project. So we are seeking to inquire what the issue is, spread awareness of these awards, particularly for some of our grantees that might have larger award portfolios, and if the funds could be returned to NSF because they could be used for other awards. We also want to limit the amount of funds that are de-obligated at the end of the period of performance when we talked about that financial adjustment process, because ultimately, if those funds are de-obligated and then cancel, they're returned to the Department of Treasury, which means they're of no use to NSF nor our financial research community. So we've been launching what's called a soft monitoring pilot to work with our grantees to seek a better understanding around this spending. And I want to be clear, this isn't an audit. We're just trying to encourage proactive communication among our grantees, NSF grants and program officers, and our branch's personnel to gain a better understanding of some of the root causes of these potential delays. So as Justin alluded to, we've been modernizing our data and analytics capabilities over the past few years, using business intelligence tools to replace Excel and other tools to identify new insights within our grant portfolio in a more visual way. So here's a graphic of one of our recent tools called the Burn Rate Explorer. So this uses data visualization to identify grants quickly that are spending differently from their peer group. So I know there's a lot to unpack here visually, so I'll take some time to explain what's going on. So the purpose is to track the remaining balances on NSF grants. So we have between 45 and 50,000 open grants at a given time. You can see them all displayed here at once. So the centerpiece here is the scatter plot, which maps each individual grant based on the time elapsed in the period of performance, shown on the horizontal axis in the bottom left to right, and the funding spent against the grant, or the vertical up and down axis. So this rate of spending is colloquially referred to as a burn rate. So if we advance to the next frame, an area of interest to our branch is this lower right-hand quadrant. So these would be grants that are spending more slowly than the time is elapsing in the period of performance, which would kind of align to that FUBs of concern scenario, which we talked about in the previous slide. So if we advance this one step further, we can use these sliders to slice and dice the data to better narrow in on this specific population. And one area that we'd be particularly interested in are these awards sitting just on the bottom of the x-axis, the horizontal axis, which would mean they're awards past the midpoint of their period of performance, but have incurred no expenditures to date. So this is something we've been piloting through the soft monitoring to gather more insights from our grantees on potential reasons for these awards in this quadrant of interest within the Burn Rate Explorer dashboard. So we've recently taken this a step further through the use of artificial intelligence, specifically what's a form of AI called natural language processing. So how natural language processing, or NLP, works for short is that we have a variety of NSF documents, proposal documents, project reports, which we utilize in this use case, and paragraphs and sentences are extracted from these NSF documents and restructured in a way that an algorithm can follow it, similar to how you and I would use our reading comprehension skills to understand what's going on with a page of text. So then the algorithm takes this text structure and chops it all the way down into individual words, and then bounces these words against dictionaries to find different parts of speech, and uses these results to put them in a bag of words. So right now, what we're looking at is we've developed a use case using this NLP platform to look at NSF project reports, specifically for awards that are underspending relative to their peers, and look at some of the key semantic words and phrases that the algorithm identifies within these reports. So in this visualization, the size of each of these boxes represents the frequency that these similar words appear within the portfolio, and then you can further explore this by individual institution if you'd like. So you could see themes very much related to the pandemic, such as travel restrictions, international visas, social distancing, and so on. So in this next topographical map view, we can explore the relationship among different clusters. And if we zoom in on this view here, we can get some interesting insights. So we see some peaks. Each colored dot on this graphic would represent a specific NSF project report that was submitted in this analysis. And we can see terms like physical distancing and remote teaching, but we can also see an interesting peak here on the right corner of this red box around young children. So in a matter of a few minutes, we were able to look at 10 to 15,000 project reports and found evidence of some of the human-centered impacts of the pandemic on our research community, who have been struggling to balance work and life responsibilities all under one roof, or have experienced reduced access to their labs, resulting in potential delays to the execution of the project. So these tools have allowed us to analyze thousands of grants in near real time, in the time that realistically it would have taken for us to look up a single project report in an NSF system. So this is just a teaser of some exciting potential on how we're looking to use AI within NSF to gather greater insights of our research portfolio. So in closing, these engagement opportunities with our grantees are one of the best parts, frankly, of our job. I joined NSF in 2020, so I haven't yet had the opportunity to engage with any of you in person. I look forward to the day when we can hopefully do that comfortably, but there are some opportunities for virtual engagement in the near future that I wanted to make you all aware of. So as I mentioned, we're going to be launching an electronic remittance pilot to canvass some of our grantees that have showed the inability to use pay.gov due to organizational constraints in the past. So some of you may be hearing from our team in the near future around that. As I mentioned, some of these soft monitoring tools we're looking to use more broadly with a smaller group of our grantees. So please don't be alarmed if you receive any specific notifications or questions from our team. We're just looking to provide business assistance and aid to our grantee community where possible. As I mentioned on our website, please download and bookmark our grants FAQ, which covers a lot of the topics covered in this presentation in greater detail. And finally, I wanted to put out some early save the dates for some upcoming PAB webinars. We have our fiscal year end and critical dates webinar, which we typically try to launch around August of each fiscal year to apprise grantees of key dates heading into fiscal year end close. And finally, as Justin mentioned, our program income webinar, which will be held in October of 2022. And I encourage you all, if you're interested or can attend that, to view the recording of the prior year webinar on our website. And we also post the current year materials on the website for broader consumption when they're available. So with that, we're excited to transition over to the live question and answer section of the presentation. Looking forward to hearing some of your questions and engaging with you further.
Okay, all right. Thank you so much, Jesse and Justin. That was just an excellent presentation. And so we do have a couple of questions that came in that we're going to answer live. And certainly if people have additional questions that they want to ask, please drop those in to the Q&A, and we'll get your questions answered. So, okay, so the first one is, can supplements have a no-cost extension, like a year extension, for example, since the supplements end when the parent award ends?
So I will go ahead and take that. It's surrounding the topic of canceling appropriations. And I wanted to just add some points to the canceling appropriation topic in general. We want to talk about this topic to bring awareness to it, because we don't want people to be caught off guard when it does occur to your award. But to put it in perspective or context, less than 1% of awards in a given fiscal year are actually impacted by canceling appropriations. The length of the appropriation availability is usually long enough that the typical award that is issued for 3 or 5 years will never run into that issue. Usually only awards that have been around for a longer period of time, maybe they experience some delays during the beginning of their award period of performance. Usually these are awards that are already on an existing no-cost extension of some sort. So I just want to put that in perspective. Your institution may not be impacted by this each year. For the larger institutions that have more than 400 active awards, they might see a handful, like 1 or 2 or 3 awards that might be impacted in a given fiscal year. But with that said, we do want to bring awareness to the topic. It's important. We don't want you to be caught off guard when it does occur. When you receive a continuing grant, so you're receiving funding in increments, if the burn rate of the award is slow and not spending within the year that it was anticipated to be spent, some of those earlier funds might be at risk of canceling. And that's why we bring up that topic of an award that had received funding in multiple fiscal years. And we use that example of a supplement. If all of the funds associated with an award is canceling in this given fiscal year, a no-cost extension will be blocked. You won't be able to get a no-cost extension past that canceling date. But in some instances, as I had covered with that graphic, you might get a small supplement in a later fiscal year. A no-cost extension might be granted for the overall award because funding on that award will still be available, even for that new date. But what that doesn't change is the original funding that is at risk of canceling will not be available to the new end date, even if that NCE is granted. It will only be that supplement portion. And so that's where some faculty members have been caught off guard by this particular topic. For that example, where you had a $275,000 award. $250,000 was available from the very beginning, and a later supplement of $25,000 was received. If that PI has $100,000 remaining today, but that original funding bucket of that $250,000 is expiring this September, that means $75,000 of that remaining $100,000 is at risk of canceling. So even if a no-cost extension was granted to, say, next June of 2023, come October 1, only $25,000 of that $100,000 would remain available. And that's the distinction that we want to get across with this message. And again, so we don't want to be hyperbolous or cause concern for most of the faculty. We just want to bring awareness to this issue because it does catch some people off guard when it does come up. And so we want to have you be educated about the particular topic.
Great. Thank you. Thank you for that response, Justin. That was excellent. Okay. Another person had asked, can you send a placeholder email announcement for those webinars that Jesse, I believe you were talking about?
Sure, thanks, Beth. I can take that one. So we could absolutely do so. So we should be finalizing the presentation dates for the year-end closed webinar, I would say in very early July. So we can send a save the date out to our ACMS listserv so everyone could get that on their calendar bookmark before we send out the formal registration. And just a reminder on the ACMS listserv, someone asked this question in the Q&A earlier. So this is compiled based on recent in the past 18 months ACMS certifiers or preparers, but if you feel like you're not getting those emails, please send an email to our branch mailbox. It's dfmpab as in boy at nsf.gov, and we'll make sure that you're added to any future correspondence.
Okay. Great. All right. Thank you. Somebody else asked, who is going to receive the FUB report?
I can take that one. So we send out both the canceling appropriation notice and the FUB report out monthly. And we send that to the latest ACMS preparer and certifier points of contact. We hope that our ACMS users will act as that liaison, that person on the ground, to communicate this message to the appropriate faculty and other departmental administrators that are working on the award. And so it will not go to the PI directly, but we do ask that those ACMS points of contact at the institution who receive that message then communicate that further to relevant stakeholders at their institution.
Great. All right. Thank you. And I know there were a couple of other questions that came in, and I would just suggest that people contact their the financial management person that's assigned, to their state. That's on your DFM website, and they can assist you with that, or the Cognizant Grants officer.
Yeah, for that award specific question that came in, I would absolutely recommend that they reach out to their financial point of contact with that award number to speak about that particular award specifically. Great.
Okay, all right. Well, I think we're basically at time here. So I want to thank everybody for joining us today. Again, thank you so much to Justin and Jesse for excellent, very informative presentation. And thank all of you in the audience for participating, and have a wonderful rest of your day. Bye-bye.